Press the bell icon on the YouTube app and never miss another update.
Friends, welcome to another video on your channel Profit Inequities. Now if you like our content, please do give us a thumbs up. Also subscribe and comment on our channel so that we reach more people going forward. Now Credit Suisse is a Swiss multinational financial services holding company headquartered in Zurich. Here we present 4 stocks that they believe will be wealth creators in 2018. Now most of these stocks are large caps and present very solid businesses for your investment. So the first company on the list is Oil and Natural Gas Corporation Limited, which is ONGC. The common minimum price here is 198.45. Now the target price here has been set at 220. Now Oil and Natural Gas Corporation Limited is a global energy holding company. The company is engaged in the exploration, development and production of crude oil and natural gas. Now if you see, with the oil prices falling, the stock had a very nightmarish time, but of late with the spike in crude, the stock has been doing pretty well. The market cap is 254,675.55 crores, which means it's like a mega cap. The EPS is 13.80, which translates into a price earnings ratio of 14.38, which is cheaper than the industry PE of 16.04. The book value is 144.58, which translates into a price to book ratio of 1.37. The dividend yield is good at 3.05 and the promoter holding is 68.07. Now the promoter here is the government of India. Now the important aspects why this could be outperformers going forward is this would benefit from increase in oil prices, and Credit Suisse expects earnings to grow at an annualized rate of 12% in the financial years through March 2020. Now this would be helped by higher oil and gas prices. Now oil prices around $60 a barrel can only sweeten the deal going forward. Now the second company on the list is State Bank of India, which is available at 306.35, and the target price here is a cool 20% plus above the common minimum price. The target price here is 381, and State Bank of India provides a range of products and services to personal, commercial enterprises, large corporates, public bodies and institutional customers. Now if you were to look at the 1-year chart, you would see that the stock was largely consolidating prior to the period before 1 month, and since then the large PSU bank recapitalization has provided positive tailwinds to this company. Now the market cap is 2,64,442 crores, which means that it's also a very large cap. The EPS is 10.44, which translates into a price to earnings ratio of 29.34, which is a bit more expensive compared to the industry PE of 23.19. The book value is 181.61, which translates into a price to book ratio of 1.69. The debt to equity is 1.0535, whereas the return on equity is 0.0177. The promoter holding here is average at 57.96. Now, according to Credit Suisse, State Bank of India would benefit from its merger with associate banks, and this would increase the loan growth. Also, they expect slower slippages and normalization of credit cost. Finally, they also believe that the gains from sale of life insurance to increase stressed asset cover to 34%. Now the third company on the list is Sun Pharmaceutical Industries Limited, which is available at 578.75, and the target price here has been set at 595. Now Sun Pharmaceutical Industries is a pharmaceutical company, and the company's business segments include US business, India branded generics business, emerging markets, global consumer healthcare business and APIs. Now if you were to look at the 1-year chart, even though this stock was probably one of the best performers a couple of years back, but of late this has been a dog of a stock with a lot of wealth which has been destroyed. The market cap is 1,38,860.03 crores, which makes it a large cap stock. The EPS is 13.2005, which translates into a price to earnings ratio of 43.8486. Now this is much expensive compared to the industry PE of 30.65. The book value is 86.99, which translates into a price to book ratio of 6.65, which is also expensive. The debt to equity is 0.3127, whereas the return on equity is 0.0865. Now, the promoter holding here is also average at 54.38. The final company on the list is Tata Steel Limited, which is available at 770.70, and the target price here has been set at 830. Now, Tata Steel Limited is a diversified steel producer, and the company is engaged in the business of steel making, including raw material and finishing operations. The company's segments are steel and others. Now, if you were to look at the 1 year chart, you would see that the company has been on a consistent uptrend. The market cap of the company is 74,851.61 crores, which translates into a large cap market capitalization. The EPS is 45.51, which translates into a price to earnings ratio of 16.93, which is a little less expensive compared to the industry PE of 20.17. The book value is 511.31, which translates into a price to book ratio of 1.51. The debt to equity is 2.5920 and is a matter of concern. The return on equity is 0.0379. The promoter holding here is 31.84, which is on the lower side. Now, steel cycle has been turning for the positive, and this company could go ahead and create a lot of wealth going forward. Now, friends, please don't treat these as stock recommendations. Please do your own research. And this is all what we wanted to show you for today. Thanks for watching, and we will see you soon with another video.